Video, I'm going to teach you guys what liquidity is, and I can use liquidity to your advantage and become profitable through your liquidity. In case you don't know, liquidity and market structure is what people call the smart money concept. I'm going to teach you guys how to identify liquidity in a chart and how you can combine it with market structure to get a perfect combo. You get, what I say, liquidity plus market structure is what people call the smart money concept. Which is going to make sense in a minute. And guys, before we go right in, please do it to like this video, subscribe, and turn the bell icon. Before we go into liquidity, you need to understand what market structure is. Because you all know that if you trade according to the trend, you're going to make profit. And if you trade against the trend, you're going to lose. You're going to make a loss. So as you can see right here, there are two types of trend or two types of market structure. You have the bullish or the uptrend, which you just see right here. We have the bearish on the downtrend, and we have the consolidation on major market gate. If the market or the trend is bullish, we do what we buy. We're looking for opportunity to buy. If the market is selling or is bearish, we look for opportunity to sell. And market is consolidating or is ranging, we don't trade at all because we don't know the market direction. This is the basics. And the next step is to identify uptrend or downtrend. Uptrend, a bullish market, is a market that makes a series of higher highs and higher lows. You can see right here, this particular high is higher than this, and this high is higher than this. You can see it's making a series of higher highs, higher low, higher highs, and higher low. This upward movement is what we call impulse movement. You can see up impulse movement, the what? The correction movement, impulse movement, the correction movement. You get, and an uptrend is a market that breaks the previous highs. As you can see right here, there's a break of structure to the upside. You can see when this impulse movement goes up and breaks or goes above the previous high, this is what we call the break of structure. And you can see at this place, after this impulse movement to create this high, there's a correction. There's another impulse movement that breaks that breaks above this previous high, give us another break of structure. This is what we should be seeing in a bullish or in an uptrend market. In a moment, I will go to the chart and show you how to identify this in the chart, but I just hope you will understand this. Then, for the bearish market, a bearish market is a market that is trending downwards and make a series of what? Lower lows, lower high, lower lows, lower high, lower lows. This downward movement right here is what we call impulse movement to the downside. Impulse movement, there is a little correction that creates this lower high. There is an impulse movement, little correction you get. So this low right as you can this low right as you can see is lower than the previous low, and this low is lower than this previous. That's why it's called lower low because it's making series of lower lows. And this lower high, this is called lower high because this high is higher than this high you get. So in a bearish market, we see series of what? Series of lower low, then lower high, lower low, lower high, and lower low. Also, in the bearish market, there's also break of structure to the downside. And see this impulse movement to the downside break this previous lower low, we call break of structure. You can see this impulse movement to the downside also breaks the previous low, what we call what? Break of structure to the downside. So guys, this I can identify what can identify um bearish market. Also, I will also show you in the chart why this right is what's called the consolidating or the energy market. And guys, as you can see, the series of what equal highs and equal lows. You can see all the highs are equal. You can see all the highs are in the same height, all the lows are in the same. Those called equal highs and equal lows. You get once market is doing this, you can determine the market direction. You get market can just suddenly go go here and break to the downside, or market might just from this particular place and just go up to the upside. We don't know. So that's why we don't trade rangy markets. Now let's talk about liquidity and what liquidity is. Liquidity simply means money. Yes, liquidity means money, and liquidity means money that is resting at key levels, most likely support levels or resistance level. So, how do we get liquidity? Remember, if using the most common trading strategies like support and resistance. Remember what we said. This is an uptrend because you can see, right? This is an uptrend. As you can see, there's an impulsive move that creates this higher high, and there is low on that high, higher low, and a higher high. As you can see, right? For those retail traders who make use of support and resistance, this is an obvious support level because you can see price came to this place to test it, passes off, test it again and passes off. So retail traders will be doing what? Will be expecting for price to come to this place again to test it before price goes up. So most of them will be looking to do what? Most of them will be looking to do what? To buy at this particular place. So you often see them uh, putting their buy limit at this particular place and putting their stop loss below this place, below this place. So for market makers such as those uh, smart money traders, those big financial institutions that have a lot of money to manipulate the market, what they will do is simply manipulate this market instead of price will come this place and goes up, or instead price will come down, clear them off, and probably enter at this particular place where price goes upward. Yet, so as you can see, for those people who do support and resistance, will most likely lose their money at this particular place. So now, how can you identify liquidity? Liquidity zones are zones of obvious support and resistance, or zones where there is equal highs or equal low. Also, if we take a look at the bearish pattern of it, you can see this is a downtrend and there is an equal as at this particular place. You get this is an this is an obvious resistance zone where most of the traders will most likely are entitled to that trade. At this place, we see sellers put their stop loss at this particular place, or people who are breakout and retest, waiting for price to either come to this place, break out from this zone, then you test it again before going up. People will put their stop loss, their buy limit, or sell others at this particular place you get. But what we price, the price will take them out before going downwards. So, guys, just like I've said earlier, if you see zones of obvious support or resistance where there are equal highs or equal lows, you get. If you know that that is a liquidity zone, you might ask me that on this particular place there was a breakup structure. You get was a breakup structure to this downside. Yes, there's a breakup structure to this downside. You get, but as long as there's an equal high at this place, know that this zone is a liquidity zone. And if you want to enter, you should target what this particular lower high. You get target this particular lower high last time. As you can see, this is a bullish market because price has been going up, making sense of higher highs, low, higher highs, low, higher highs, and low. You get, so we know that this is an uptrend. So we're looking toward to buy in this particular type of market. So now at this most recent place, what can we see at this place? You can see what I said at this particular place. Let me show you guys. So at this particular low, right, you can see market moves up to create these higher highs. Then you can see what happens here. This is not an actual low though, but let's see. Market came to this place, create this lower low, then it came to this place again. Then as you can see, it creates this and went here. Understand? So for most people, as you can see, this is looking like a support zone. Okay, this particular place look like a support zone that most people will like to enter because you can see below right here and seeing what and say equal lows at this particular equal low at this particular place. What are you seeing price currently doing? Price as what? As break as push down below this particular place. You get okay for most traders who saw this particular place and put their entry at this particular place, you get as you can see, price would have taken them at you understand. But for those people who know how to trade using this strategy, you understand that this particular place is the right place for you to enter into this particular market. So now this particular place is the right place for you to enter into this particular market. You get because at this place that you can see this candle, you can see this place, there's an order block at this place and a fair value at this place. You get so you can see price come down to this place where there's this where this other block is, and price come to this place. Get so for those people who take that trade when price make this particular but particular low at this place eventually lose their money because market has taken them down, has come to this particular other block before market will go up backward again. So for you, what you simply be doing is simply taking out your not position tools and putting put your target at this previous high and your stop loss below this place. And just we once price get to this place, you can enter into this particular market. Again, this was close to what I was looking for to trigger as an example. If you have any question, I'm in the comment section respond to your questions. I'll see my next video. Please remember to like, subscribe, and turn on the bell icon.